So over the last few days, there's been quite a few major announcements for the big tech companies. We've seen Amazon, Apple, and Google come out with pretty surprising data, but not only this, ChatGPT has recorded some record-breaking numbers and introduced new features that is going to affect everyone who uses its platform. So today's video, I want to go over major tech news, crypto news, and also things going on with ChatGPT. So starting off with ChatGPT, what we've seen is that ChatGPT just recently surpassed 100 million active users just 2 months after their launch, and this is faster than any app in recorded history. No company has done this faster. Not Google, not TikTok, not any platform has ever done this. So this is something that is record-breaking because people are realizing the utility of artificial intelligence tools. And I think in the future, we'll see more artificial intelligence tools grow just as fast as ChatGPT has. But the key thing moving forward is ChatGPT going to survive? Because we are still so early on and they still need to figure out how to monetize their platform. So the key thing in my mind is going to be, yes, they've grown tremendously. They've grown really fast, but how are they going to survive? How are they going to generate revenue long term? So we'll keep an eye out on this, but it's a very exciting statistic to see. But speaking about making revenue, ChatGPT also just rolled out their brand new premium feature, which they call ChatGPT Plus. And a few weeks ago, we talked about how ChatGPT had been talking about rolling out a premium feature. And I talked about this over on Twitter, where I said that they had posted pictures and there were leaks that there was going to be a $42 per month professional plan that was going to make it where you had availability even when the demand was high. It was going to have fast response speed and priority access to new features. But according to their official announcement, now this is going to be at $20 per month. So according to all of the leaks and leading up to this major announcement, they thought they were going to charge more money, but now they say it's going to officially be available for $20 a month, starting off to customers in the US who were on the wait list. And they're going to continue to roll this out over the coming weeks with plans of expanding to additional countries and regions very soon. So if you want to get access to this premium feature, you can apply simply going to ChatGPT. They have this waitlist where you can apply and you can get early access if you want. But either way, it's very exciting to see artificial intelligence tools start to take off. More people realize the value in them, more people use them, and now ChatGPT is finally testing out a way, at least, of how they can make money. Because long term, the only way we're going to be able to use this platform, the only way it's going to succeed long term is if they can make some money, and this is the first step of them making some revenue. I wanted to quickly interrupt today's video to bring you a word from our channel partner, Bixbit. Bixbit is a provider of solutions and equipment for mining farms, and it's been around since 2016. It offers custom firmware, immersion cooling solutions, special racks, and more, and is currently serving people in over 15 different countries, ranging from Germany to Canada to Norway and many more. Bixbit is currently the only major provider offering custom firmware for WhatsMiner ASICs, and this firmware, which is completely free, improves ASIC's performance, increasing hash rate by 20 to 40% and even 50% when coupled with an extra power supply. The way it works is users pay a dev fee ranging from 1.8% to 2.8% depending on the ASIC model. Together with a firmware, users can get access to an automated monitoring system, or AMS, and it is a monitoring system that is built into the personal account where the user can find many useful tools and settings that'll help them further work with mining farm. With AMS, user can see the status of all miners, receive notifications about important events, and track all the information that they need. In addition to this, Bixbit is launching a bug bounty campaign with a twist, so users can get rewards not only for finding bugs, but also for inviting other miners to join the campaign. The program will last for just 1 month, so anyone who's interested should join using the link in the description, but you also don't want to miss out on an opportunity to test Bixbit products with reduced fees, win actually a Bixbit branded ASIC, and the top 3 users on the leaderboard will win special prizes. So definitely check that out. Don't miss out on these opportunities. Let's get back to the program. Now let's talk about what's been going on with Twitter, because Twitter just announced that they are going to be officially rolling out a way that all creators can share revenue with the company. Elon Musk came out on Twitter and said that Twitter will be sharing ad revenue with creators starting today on February 3rd, Friday, February 3rd, 2023. This is a major announcement not only for Twitter, but also for creators, because Twitter has been trying to grow and expand ever since Elon Musk took over the company. They've been looking for ways to make more revenue. They've been looking for ways to have creators post more content on the platform, and by them sharing revenue with creators, that is going to be a game changer. Elon Musk did say on Twitter that you need to be subscribed to Twitter Blue in order to be eligible for this program. So most people who are creators on the platform it's really a no-brainer in my opinion. But moving forward, we'll have to see more details of how much they're actually paying out, specific details of how they're sharing this revenue with creators, and how to actually go about getting your first payments. So we'll see how that plays out, but either way, this is a game changer for Twitter. It's going to encourage creators to post more content on the platform. It's going to be a way to create more engagement on the platform, and just overall helping the ecosystem on Twitter in general, in my opinion. But let me know your thoughts. Do you think it's a good idea? Do you think it's a bad idea? Let me know. Let's talk about now what's been going on with crypto, because in the crypto space, we've seen that Charlie Munger, he's 99 years old, and he came out recently writing an opinion piece on the Wall Street Journal about crypto. And he said that America and the United States government should ban crypto entirely. And his piece was called "Why America Should Ban Crypto." He published this on the Wall Street Journal, and he basically talked about how cryptocurrency is not a currency, it's not a commodity, it's not a security, and instead it's a gambling contract with nearly 100% edge for the house, entered into a country where gambling contracts are traditionally regulated only by states that compete in laxity. So ultimately, he's saying that the U.S. government should outright ban crypto, just like China did earlier in 2022, and then even prior to that. He says that moving forward, he doesn't think cryptocurrency has any value. He said it's rat poison. He doesn't agree with it at all. But it's interesting to see that someone who's 99 years old, who is near the end of their life, just in terms of average age, that they're spending this much time writing pieces, writing articles, opinion pieces on why they think crypto should be banned entirely. You would think, I've seen a lot of people talk about this on Twitter, but you would think someone in his position would be spending more time on other issues, spending time with their family, but instead he is so against crypto, so against Bitcoin in general, that he is dedicating, days and months to researching it, writing opinion pieces on it, and this is something just interesting to see in general. I think when you're just looking at him, he's not as up to date with a lot of the new technologies. It's pretty obvious. You would think that he wouldn't be doing this, but he is, and he's still continuing to call out crypto. Many people aren't too worried about him saying this, but you got to read the piece, see what he has to say about it, because he has been a very successful investor over, decades and decades. Moving on, let's talk a little bit about what's been going on with the overall economy. Recently, the Federal Reserve had their FOMC meeting, where Jerome Powell came out and said that the Federal Reserve raised interest rates by 0.25 percentage point, so 25 basis points. And this was a very positive sign for the overall market, because we had seen that the Federal Reserve had increased interest rates by 75 basis points in 4 consecutive meetings. Last meeting in December, they raised it by 50 basis points, and now in February, they increased it by 25 basis points. So we have started to see a definite decrease in how much they're raising interest rates by, and during this meeting, Jerome Powell came out and says that, yes, we can now say for the very first time that the deflationary process has started. He said, it's just started. We can't confirm that this is a victory in bringing inflation down yet. He says it's still very early to say that, but you definitely can see signs that things are getting a bit better. So moving forward, he says that we're going to continue to have to analyze data, CPI reports, because inflation is still elevated, but we'll keep an eye on that. We're going to monitor it closely, and we should be seeing a slowdown continue for the remainder of 2023. Keep an eye on this. The next report is going to be CPI data on February 14th. That's going to be a big indicator and a big catalyst for the market. So keep an eye out on February 14th for CPI data. If it's bad, well, markets are going to take a big hit. If it's good, markets are going to continue to rally. Last few things are going to be with a few of the major tech companies. So Google recently reported their Q4 earnings for 2022. And in these earnings report, they missed expectations, much like many of the big tech companies. Google missed, Apple missed, and Amazon did beat expectations, but they gave very light guidance moving forward that people did not like. So, for example, Google, they missed out on revenue. They reported $76.05 billion in revenue versus $76.5 billion expected. The key thing with Google in general was YouTube advertising. YouTube advertising revenue dropped dramatically versus what was expected. Expected was at $8.25 billion, and they brought in $7.96 billion in advertising revenue. And this is much of the same across all of their businesses. Google Cloud revenue was down below expectations. We saw that overall revenue was down, YouTube revenue across the board. When you're looking at Amazon, though, it was a little bit of a different story. Amazon reported that they actually beat expectations in Q4 2022. They reported $149.2 billion in revenue versus $145 billion expected. But the thing here is that their guidance moving forward was very light and reported much slower growth than people were anticipating. So this caused a lot of fear among investors. Not only this, but also Amazon just announced they're going to be closing down certain Amazon Fresh and Amazon Go stores, which is suggesting that their venture into the grocery space has not been performing as well as they would have liked. We don't know specific details as to which Amazon Fresh or Amazon Go stores will be closing down or what regions they're going to be in, but they did say that this is in an effort to help cut costs and reevaluate this entire approach to groceries and this sector in general.